Hello, my dear students. I'm Dr. Prajna Mattihalli, who is working in Government First Grade College, Dharwad. I have already discussed many important things about principles and practice of auditing. And here in this video, we are discussing about the relationship between accounting and auditing. How much they are related and what is the difference between accounting and auditing. Since they are very much associated aspects, we have to see even the differentiating aspects. We have to think of it, we have to analyze it so that we can appreciate how important auditing is for the sake of genuine entries in accounting, or the right and fair view of the accounting can be ascertained with the help of auditing. Come friends, let us enjoy the slides and understand the topic. Here, I'm differentiating accountancy and auditing. First point, accountancy is concerned with preparation of accounts and auditing is concerned with finding out the accuracy of accounts. As you know very well, accountancy tells us what are the entries. That means what are the transactions taken place in the field of business. So it is concerned with the preparation of accounts. Preparation is journals, ledgers, and also trial balance or final accounts, just like profit and loss account and balance sheet. So preparation of accounts is concerned with the accountancy, whereas auditing is concerned with finding out the accuracy, to what extent the accounts are prepared rightly, to what extent its arithmetical accuracy is right, to what extent principles are being implemented. So accounting is finding out the accuracy. This is the first point. And then object of accountancy is to ascertain net result of business. So what the result you have gained in the business, whether it is loss, whether it is profit, what happened, what is the result of your business. So that is associated with the accountancy. But here auditing is to verify correct and fair view of business, to what extent your business is in correct status, how is your business, what is the fair view of it. So that is the objective of auditing. And accountancy is continuous with happening of transactions. That means what? When the sales takes place, immediately you make the entry. When you purchase something, immediately you make the entry. So whatever may be the expenditure, whatever may be the income, immediately the entries will be made. That means simultaneously the happenings of the entries and recording of it takes place. So accounting is, it goes directly with the happenings of the business. But auditing, when do you get audited? After completion of the financial year. So after completion of the accounting, that means after completion of the financial year, your accounts gets tallied, or you complete the narrations of the accounts, and then you start your auditing work. Therefore, after completion of accounting, you start the auditing. And what next? Accounting gets ended when financial year ends. For example, April 1st financial year starts, and after 12 months at the end of March, that is March 31st, this financial year gets ended, isn't it? So at the same thing, accounting starts from April and it gets ended by March. Along with the financial year, accounts gets ended. You will close your balance sheet, you get it tallied, you close your trial balance, you close your profit and loss account, you ascertain the profit and you transfer it to the balance sheet and the balance sheet gets ended. But how about the auditing? It gets started when the financial year ends. So when the financial year ends, accounting gets ended, but the auditing gets started. So accounting concerned with present transactions. Whatever is going on, immediately it gets entered into the accounts. But auditing is concerned with the completed year. After completion of the financial year, for example, 1920, 2019 and 2019-20 gets ended by April 2020. Then in the April, new year starts. So your financial year gets ended and your accounts gets tallied and you have completed the accounting work. But then the auditing gets started. You have to audit there afterwards. So you are auditing the earlier year's book or earlier year's entry. It covers all transactions which have financial implication. Accounting is concerned with all the transactions, but auditing, it covers final statements. Only profit and loss account and balance sheets are audited. So it is concerned with only final statements. Accounting contains details of entries. So all the details will be there. From whom you have purchased, when you have purchased, date will be there, amount will be there, and you will be writing the being, that means the narration of the business transactions will be there, who gave it and who have received it, everything, the details will be mentioned. But as far as auditing is concerned, only sample transactions are verified. Only few transactions are verified here. As far as accounting is concerned, all financial records are entered. So whatever may be the amount, whatever may be the quantity, it will be entered in the accounting. But sample checkings will be taken place in auditing. You cannot audit all the entries. Only sample entries will be verified. Governed by accounting standards, as you know very well, AS21, AS14, that is accounting standards, which are prepared and sent by I.C.W.A, Institute of Chartered Accountants of India. So just to make one uniformity among all the organizations, it has introduced accounting standards. So while doing the accounting work, we follow the accounting standards. And as far as auditing is concerned, we follow the standards on auditing, not accounting, standards on auditing. And accounting is performed by the accountants, as you know very well. And auditing, the work is undertaken by the auditors. So who is an accountant? He is an employee. Who is an auditor? He is a professional body. He may be an individual or one organization, but it is a professional body. And who appoints the accountant? The management appoints the accountant. Who appoints the auditor? That is the owners of the business, means shareholders appoint the auditors. And as far as accountant is concerned, no specific qualification is there, and it's up to the decision of the management whom should be appointed, what should be his qualification, and how much experience should be there with him. So it is finally left with the organization. But as far as the auditor is concerned, chartered accountancy, that is, he has to go through the examination conducted by the Institute of Chartered Accountants of India. That is compulsory for him. He has to pass it. So CA is the qualification for the auditor. And what is the remuneration for the accountant? It is salary. He is an employee. He is appointed by the management, and his salary will be paid by the management. But as far as the auditor is concerned, he is appointed by the shareholders, and he gets the audit fees audit remuneration, audit fees, no salary. And scope of accounting work is fixed by the management because it appoints him, so it decides how much he has to work. Scope of auditor is not a final by anybody. So it is specifically told by the law. As you know very well, in my earlier videos, I have discussed rights, liabilities, duties of the auditor, wherein I have discussed how much liability the auditor is having. So his scope is fixed by the law. That is Company Law, Indian Companies Act 1956. And compulsorily, every organization has to prepare the accounts. It is compulsory for all organizations. So every organization has to keep the accounts, but auditing is not compulsory. Only for few companies, that too, the companies of that is public companies. For public companies, auditing is compulsory. Otherwise, it is not compulsory. So financial statements get ready by accounting. So what will you do? What is the result of accounting? That is, financial statements are ready. But how about the auditing? Audit report gets ready with the help of auditing. Then how about the report to management? That means accounting means after preparation of the accounting, it is just reporting to the management how it has been worked. But as far as auditing is concerned, as you know very well, shareholders appoint the auditor, shareholder decides the remuneration of the auditor, shareholder removes him or continues him or reappoints him. So here he has to give the report to the shareholder. Both it is the duty of the shareholder and also it is the right of the shareholder that he has to give the report to the shareholder. So, my dear friends, hereby we have discussed so many differential points, and with the help of this, even we can understand how nicely auditor conducts his work and how important it is. So, let us understand in in my next videos. Let us understand many more aspects of auditing. Please give me the feedback for this video also, and let me end today's discussion about the auditor. And with the help of this, even I think you can give me some feedback also, to what extent you have understood it, or what do you want for its improvement. Please give me the feedback also, and let me do my next videos with little more effectiveness and all. So thank you, my dear friends.